Okay, right. Thank you.
Yeah. So, hello
But
everyone.
I'm not done, ma'am. Now done.
Yeah. Hello everyone. Good evening. Today we have CA John Ravindran Moses on our platform. He is a chartered accountant with more than 3 decades of experience. He has vast experience in work related to charitable organizations, like from audit of charitable organization, presenting them before CIT appeals, etc. He has also conducted various trainings for the NGOs on the topics of income tax, FACRA, formation law, GST, etc. Today, he will impart his knowledge related to the topic of introduction to taxation of charitable and religious institutions. Welcome to Educating, sir. Over to you.
Yeah. Thank you. Thanks, Pooja. Thanks for the introduction. Today I'm going to only briefly introduce the various aspects of taxation of charitable and or religious institutions. I started my practice way back in '89. When I started my practice, the firm where I did my articleship, also they were specializing, they are still specializing audit of charitable organizations. I used to wonder why at all there should be an audit, why at all the organization should file tax returns. But today I tell you, charitable organization audit and running a charitable organization is more complex than doing a business. I'll just briefly explain some of those provisions. Maybe if you're interested, educating can conduct a detailed course, which I'll be happy to do that. Okay, before we move further, right? There are a lot of questions, of course, may not be with the professionals, but the NGOs, charitable organization, whether income tax law is applicable to them. Are they liable for income tax or they need to submit? Because the major question in their mind is that we are doing charity. We don't do any business activity. What we do is that we collect donations from various people and then we do some charitable work or we get offerings from various people and do religious activity. There is no income per se for us, and are we liable for tax? So this question is answered if you go to section 4 of the Income Tax Act. We call this section 4 as the foundational section or the basic section on which the income tax law, entire law is built upon. And what section 4 says is that it says that income tax shall be charged, it goes on blah, 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 for that year in accordance with and subject to the provisions of this act. What it means, income tax is applicable, right, under the various provisions, subject to the provisions of Income Tax Act. Then it says, in respect of total income of the previous year and of every person. There are two key words here in this definition. First, it says, your income is chargeable to tax only if it is total income. If it is not an income, then your income is not chargeable to income tax. Take the example of agricultural income. We all know, by and large, agricultural income is used only for finding out the slabs for tax purposes. Otherwise, agricultural income is exempt from income tax. Similarly, what share of profit we get from partnership firm is exempt because partnership firm already pays taxes on that. So if my income is under the definition of income tax law, then I'm liable for income tax. If my income is outside the income tax law, then I don't need to worry about it. Then it also talks about in respect of every person. Income tax shall be charged in respect of total income of every person. So if I am a person under the income tax law, then I am subject to income tax. If I am not a person under the income tax law, then I am not subject to income tax. So let's first understand what is income. Income is an inclusive definition. Section 224, explain income. There are various income that are listed there. We all know that salary is an income because we pay taxes on salary. Whether we like it or not, my employer deducts TDS from my salary income. House rent is income. Bank interest is income because nowadays banks deduct TDS from my bank interest. And also, income tax department captures those income in AIS, annual information statement, and I'm bound to pay that. Business income is taxable, whether business is run by an individual or it is run by a partnership firm, it is run by Hindu Underwood family, HUF, or run by LLP or by company. Whatever form you do it, business income is also liable for taxes. And it goes on. And included in the definition of income is voluntary contribution received by a trust. What is voluntary contribution? Voluntary contribution is something you get as a gift. By definition, income is something which you should earn, you should work for, or you should invest and get. Take, for example, salary. You earn the income because you're working under an employer, you earn an income. Bank interest, you're investing money in bank, you're getting interest. Business, you're doing business with a motive to earn profit. So very clearly, the definition under section 224 of Income Tax Act says that voluntary contribution received by a trust, whether created wholly or partly for charitable or religious purposes, is income. They also added, by way of explanation, the word trust includes all other legal obligations. Just because Income Tax Act, Income Tax Law uses the word trust, it does not mean that the societies, if I'm registered as a society, I'm outside income tax law. No. If I'm registered as a charitable company, I'm outside. No. If I'm formed by way of act by the parliament or by a state government, there are a lot of private universities that are established by a way of an act of the state government. There are institutions like CA Institute, Cost Accountants Institute, Company Secretary Institutes, IITs. These are all created by way of an act of the parliament. So, however you're formed, okay, right? They're all covered under the term trust. It is not trust alone. The word trust includes societies, companies, every other form. So that's what the explanation says. And section 12.1, which talks about, which deals with the income of the charitable organization or religious organization, very clearly says that, categorically says that any voluntary contribution received by a trust shall be income. Any voluntary contribution received by a trust created only for charitable or religious purposes shall be income. So, which means that income earned by or received by a charitable organization is subject to income tax law. I'm not saying they should pay taxes. Okay, it is subject to income tax law. We need to understand that. The next one is that who is a person? Again, the definition of person includes various people. We all know that as individuals, we pay taxes. So we are covered included on the definition of person, section 231, which speaks that HUF, Hindu undivided families are covered. AOPs, Association of Person, they are covered. I'll explain that how they are covered. Companies, registered companies, LLPs, partnership firms, cooperative societies, they're all covered. It's all included there. The list includes that. Included in that definition is that an association of person or body of individuals, whether incorporated or not. What is the meaning? When two or more person coming together for a common cause. It can be two companies. It can be a company and an individual. It can be a company and LLP, or it can be a company and society. Okay, right? Society is not included in the definition. So I'm just saying that it can be a company and corporate society. They have come together. An explanation what it says is that, if you read that, their coming together is not to earn money. Whether or not such person or body or authority or juridical person was formed or established or incorporated with an object of deriving income, profits, or gains. My objective is not earning income. My objective is only doing charity. I only want to serve the people. I only want to do the religious work. I get donations. I get voluntary contribution. I do that. But the law says that if two or more person coming together, or if two or more individuals coming together, body of individuals, even if you're not registered, even if you're not incorporated, even if you're not registered as a trust, if you're not registered as a society, not as a company under Section 8, the moment when you come together and when you want to serve, not making profit, the law says you are also covered under the income tax law. So, friends, there are two key words I explained to you. Because the main section 4, which talks about charging section, it says that income tax shall be charged in respect of total income of every person. So charitable organizations or religious organizations are not exempt from income tax or not excluded from income tax. They are all covered in income tax law. Because the word uses trust, let's try and understand what is a trust. Of course, there are other forms of organization that are possible. You can form a society, you can form a Section 8 company, or you can come into existence by way of an act, either in the parliament or in any state government. It is all possible. Trust, as we all understand, as some of us may understand, is an obligation annexed to the ownership of the property. Okay, right? Basically, it is an obligation. For what? It is attached to a property. For what? For the benefit of another. We are creating a trust for the benefit of other. And what are other conditions? That obligation, the ownership of property, is arising out of confidence reposed in and accepted by the owner, or declared or accepted by him for the benefit of others. Okay, right? Or of another owner. So in simple terms, trust means it is a responsibility somebody has accepted. It can be more people also to do a benefit for others. I have taken this definition from Indian Trust Act. Please understand that this particular act, Indian Trust Act, does not apply to public, charitable, or religious trust. This act was enacted primarily to help the private trust. So that comes to the next one. What are the different types of trust that are possible? The first one is public trust. What is a public trust? When the beneficiaries are public at large, when the objects of the trust is public, then it is a public trust. When you serve a larger public, when you want, supposing you're starting a school and you say that the school is meant for everybody, you don't restrict based on religion, community, caste, or whatever it is, then it is a public trust. Okay, right? There can be complications. I don't have time to explain because I'm just trying to introduce, the income tax law relating to charitable organization. What is a private trust? We all understood public trust is for the benefit of a public. Private trust is for the benefit of specified individuals or a group of persons, the beneficiaries. Take the example, I have a daughter. In case I am sick, right? And I am the only person, right? My wife has gone to be with the Lord. I'm the person. And what I do is that let's say my daughter is minor. She's 10 years old. So I create a trust and appoint trustees saying that the income from the trust shall only be spent for the benefit of my daughter, for the welfare of my daughter. And the trustees can take this much salary. This is a private trust because the beneficiary is my daughter, specified, clear. Okay, then the third one is charitable trust. What is a charitable trust? The objects are charitable. The beneficiaries are getting the benevolence. So it's a charitable trust. Religious trust, unfortunately, the religion is not defined in the Indian law. So religious trust, we all know, when you do some religious act, any trust for that is a religious trust. What is religious and charitable trust? Till few years back, there was a confusion because tax exemption under section 11 speaks of, notwithstanding section 60 to 63 goes on, any trust established for the benefit of charitable or religious. So what was the stand taken by the income tax department? They said that you must be either a charitable trust or you can be a religious trust. You cannot be both charitable and religious trust. So, of course, now this is settled now. You can have both religious and charitable trust. Supreme Court has given a decision. You can have that. So there was a confusion. So what we were used to doing that we used to register the section 1023C because there was no such restrictions on that. These are the broad categories or classification of trust. And what is charity? Because we need to understand what is charity before we get into a little more on the requirements under the income tax law. Charity, again, there are not many definitions available. Let's look into what the definition under the income tax law. Section 215 of the Income Tax Act defines charitable purpose. It says that charitable purpose, it's an inclusive definition. What is inclusive definition? I mean, looking into the overall nature of the definition, the objective of the definition, more could be added to that. Okay, the charitable purpose includes relief of the poor, education, yoga, medical relief, preservation of environment, preservation of monument, advancement of any other object of general public utility. GPU, we call that. Advancement of any other objects of public utility. So there are seven limbs. Income tax law says that the charitable purpose, if you are doing relief of the poor, you are a charitable organization. If you are running educational institution, yes, you are a charitable organization. You are teaching yoga, you are encouraging public others to do yoga, you are charitable in nature. Medical relief, you are running a hospital, clinic, you are a charitable organization. Preservation of environment, you are involved in preserving environment, including forest, wildlife, you are. Preservation of monuments, places of or objects of artistic or historic importance. The last one is a little critical one. Any other object of general public utility, GPU. What is that? The various code I've already told you, the charitable purpose includes. So the various courts have held that as long as you serve a larger public, then you are charitable nature. They have held that Bar Council is charitable in nature. Chartered Accountant Association is charitable in nature. Okay, Merchants Association held as charitable in nature. So what happened is then the government, came back and then they said that, I think in the year 2007, government said that no more this nonsense. You are helping business community and you claim charitable nature and enjoying the tax benefit. I'm going to restrict that. I don't have time, so maybe when we have time and we have a larger discussion, I'll explain. And 2022, Supreme Court has come out with an important judgment. Ahmedabad Urban Development Authority, a landmark judgment. And we will discuss if time permits, not today, right? And also, they also came out with one more judgment at the same time. It's a Andhra Pradesh, Hyderabad-based organization. It's on education purposes. I'm sorry, I forgot the name of the judgment. I'll share that in case we are meeting again. So we understand that charitable organization, unfortunately, religious purpose is not defined under the income tax law. So we need to go based on the decisions, okay, right? So it casts responsibilities on us, those running charitable organization. There are three types of responsibilities on us. One is the organization per se. They need to, observe. They need to fulfill. They need to follow certain conditions. Okay, we'll talk about it a little later. Then they also cast, the outsiders. When you transact with outsiders, what are all the, responsibilities? The outsiders' responsibility includes TDS on salaries or contracts, rent, professional charges, brokerages. All those things will be applicable to us, relevant to us. And also they can pass on benefits, ATG benefits. Okay, earlier there used to be 35 AC. Now it is not available anymore. So let me just briefly tell you about the exemptions and then we'll move forward. There are basically two types of exemptions available to charitable organizations. Okay, the first one is exemption under Section 1023C. The other one is exemption under Section 11 to 13. Now, these two exemptions are historic in nature because there is not much difference between these two. Earlier, those of us who are practicing in income tax law will know that anything covered under Section 10 is exempt. We don't need to worry about it. Agricultural income, I said, it is covered under Section 10. There are various exemption granted to individuals, organizations, and things like that. It goes on. So till about 2002 or 3, organizations that were eligible under Section 10, in those days it has to be 1022 and 1023C, they were not required to file tax returns. They were not required to follow most of the conditions, almost most of the conditions. But slowly, government brought more and more conditions. Okay. Now there is no difference between, virtually there is no difference between 1023 and section 11 to 13. What is 11 to 13? Section 11 to 13 is conditional exemption. We call this as a conditional exemption because it stipulates a number of conditions. I mean, you are eligible for tax exemptions provided you fulfill those conditions. If you don't fulfill those conditions, you're not eligible for tax exemption. Okay, right? So these are all, I mean, the broader categories of exemptions available to us. 1023C again can be divided further. There are certain organizations, education institutions, and also medical institutions that do not require registration. I don't have much time to explain that. I mean, there are certain institutions. Take, for example, if you are an educational institution or if you are a hospital, medical institution, you are wholly or substantially financed by the government. What is that wholly or substantially financed by the government? Take the example of aided schools. I'm sure you are aware of aided schools, where the government pays the teacher's salary. And where the majority, more than 50% of their income is from, wholly or substantially, that's right. Substantially means more than 50%. More than 50% of the income of the education institution or medical institution is from government, then you are exempt from income tax. You don't need to go for registration. Not allowed to follow other conditions. Registrations that are you need to fulfill the conditions. You'll have to register with the Commissioner of Income Tax exemption. These are all very similar to section 11 to 13. Okay, right? It says my condition, my internet is not stable. Let me hide my video and then I'll continue. Okay, right, fine. So the registration, the second category of main organization under section 1023C are those organizations for which registration is required under section 1023C with the Commissioner of Income Tax. I'm sorry, with the Commissioner of Income Tax exemption. Okay, right. Let me first briefly tell you about this section 1023C exception. It's education institution have a benefit of this exemption under 3AB, 3AD, and 6. 3AB, as I explained to you, it is wholly or substantially financed by the government. 3AD, if you are running school or schools under one trust, all the income put together, if it is less than 5 crore, then you don't need to go for registration. 6 is you have to go for registration with the commissioner. Similar conditions for main medical institution. Other charitable institutions, you have to compulsorily go for registration. You can take a registration under section 1023C or religious and charitable. Here they make it very clear. You can have religious and charitable. Here also you have to go for registration and you have to fulfill various conditions. 1023C has more provisos, basically to cover the various conditions, various compliances that we need to do for registration in section 11 to 13. 11 to 13, as I told you, is conditional exemption. Subject to fulfilling these conditions, you are eligible for tax exemption. The first condition is registration of the Commissioner of Income Tax. What is that registration? If you want to enjoy benefit, you must be registered with the Commissioner of Income Tax. Right now, the registration is granted under section 12AB. And this was started about 2 years back, and many organizations failed. They did not file it correctly. They made mistake in filing application. Government extended first time, and then again they extended last year till September. They have given one more opportunity to organizations that have not registered. They said that up to June, we are giving you opportunity. You can still rectify all those things and then come good and then come to us. This is the fundamental condition for exemption. You must be registered with the Commissioner of Income Tax. Okay, only then you're eligible for benefits, various benefits. I'll briefly explain to you. Now, the next condition is that you need to apply your income within India. Application word is a very large term. I will not be able to explain today, but essentially what they say is that whatever you're spending towards the objects of the organization, it should be done within India. The benefit should come to Indians. You cannot spend something outside India that the foreigners will get benefit. Government is very clear. They say that I am giving you exemption for doing charity or religious work in India, confined to India. If you want to do outside India, then there are other ways. Government says you take permission from me and then do it. Okay, right? Then the third condition is that the benefit should be available to all. As a charitable organization or religious organization, you cannot restrict to a particular group. Religious organization, it is possible for them to say the benefit will be restricted to particular religious community, but charitable organization, you cannot restrict. Okay, right? And even religious, I mean, you should make the services available to everybody. Okay, right? I don't have much time to explain. Maybe later when time permits, I'll explain. The next condition, the fourth condition is that in case you're winding up, in case you think that the trust is not able to carry on the activity, or the society is not able to carry on its activity, you want to wind up. The net surplus, what are the net surplus? Your assets minus liabilities. When you sell that, that has to be given to another organization with similar objective. You cannot, take that money and then share with the owners or the trustees, not the owners, the trustees, the managers, governing body. That is not possible. That is ruled out. You need to transfer the surplus to another organization with similar objective. In fact, if you go through Form 10B, it says that you can give it to another organization with the same object. Okay, let's not get into those controversies. We'll skip that. Maybe next time when it comes, we will see that. Okay. And the other conditions are there should not be any personal gains to promoters or managers, etc. In fact, we need to take a lot of time to understand this section 13. Okay, section 13 is one of the very dangerous section. It very clearly says that you should not benefit the promoters. Just because X is the founder and he cannot expect any benefit from that. Supposing he works in the trust for which he is paid reasonable remuneration, salary for what he's doing, fine. Beyond that, he cannot expect. Just because he's a trustee, he cannot expect a free house provided by the trust. That is not possible. Okay, right? The next one is that you will have to invest in specified modes. What is that specified mode? Section 11.5 gives various list of investment that you can make. You cannot go beyond that. Supposing somebody says you put the money here, this man will give 24% interest return. Take for example chit funds. Government says no, you cannot. Government says that your principal should be secure. I'm not concerned about the interest. So now, of course, government is now allowed, relax a little bit. You can even invest in mutual funds, not every mutual funds. So investment can be made only in specified modes, specified under section 11.5. The next one is maintenance of books of account and other documents. Very, very important. This was introduced from last financial year. Government has prescribed about 9 or 10 different sets of books of account. Rule 17AA talks about what are the books you should maintain, where you should maintain, how you should maintain, how long you should maintain. All these are given there. For your information, the charitable organization, irrespective of their income, okay, need to keep their books of account for 11 years. If you include the current financial year, you have to keep the books of account. When I say books of account, it includes your receipts, it includes your vouchers. If you're a larger organization, if you're managing larger organization, you better find a place for saving all these documents. And they also say that in case there is a reopening under section 148, they have to keep the records for that year also. So this is a very important condition. In case you don't keep the books of account as per the law, you're not eligible for exemption. Section 11 benefits will be denied to you. I'll tell you what are those section 11 benefits. Of course, government has now reduced the tax liability. I don't have much time to explain that to you. Audit of accounts. It is mandatory. The moment when your gross receipts exceeds 2.5 lakhs, you must get the accounts audited by a chartered accountant. It is not like your business one, Form 3CA, 3CD. Then the turnover limits are given for business professionals, 50 lakhs, for business community, 1 crore, 2 crores, or 10 crores. Nothing is there. The moment when the charitable organization income, gross receipt, I'm not talking about net profit, gross receipt exceeds 2.5 lakhs, you will have to mandatorily get the accounts audited, and then by a chartered accountant, he has to file Form 10B or 10BB. Failure to file this audit report, failure to get accounts audited will attract penalty, and also you will not get the benefit. You are not eligible for tax benefits. Section 11 benefits are not available. You have to file the tax returns. You cannot relax. You cannot think that my running of the trust is running into deficit. I'm not making any profit. My income is 2.5 lakhs. I spent about 3 lakhs borrowing money from my friends or put money from my pocket as a loan. So there is no income at all. So I will not file. No. You should file. In case you don't file, your income is liable for taxes. Earlier on gross income, tax department was charging taxes, but now they have modified that, and of course you'll not be paying taxes on the gross income. When the time permits, we'll discuss that. Okay, right? And what are the various incomes that a charitable organization has? The first one is voluntary contribution. We already discussed that. Corpus donation. Corpus is something you collect, get it for your capital. Now this has changed a lot. Earlier, all that was required was get a letter from the donor saying that it is corpus. Now to get it in writing, stating that this is for corpus, that was sufficient. Now everything is changed now. So much of changes, we don't have time to discuss that. Income from property held under trust. When we say that income for property, we all will think only the rental income. Supposing I have a building from which either I get a rent, monthly rent or hall rent. No, that is not the only thing. The property here for the purpose of charitable or religious organization is that the activity that you're doing, supposing you run a school, the school income is income from property. You run a hospital income is income from property. So that is also main income for the organization. Capital gains, like any other person, capital gains is also liable for taxes. Profits and gains of business. Is it possible for a charitable organization to do business? Yes, very much it is possible. But we don't have time to discuss that. Section 11.4 and Section 11.4a discusses or explains about the business part of it. What are the conditions to be done when you can do a business? In fact, I told in the beginning, Ahmedabad Urban Development Authority, Supreme Court has come out with a very clear judgment. In fact, it overturned a lot of landmark judgments that were there earlier. Okay, right? So what are the different exemptions? Supposing, I comply with the various, conditions, right? I've listed so many conditions. I comply with all these conditions. What are the various exemptions available to me? The first exemption is that on income applied for charitable or religious purposes. Okay, sorry for using the word "un" in the conjunction. It is charitable or religious or charitable and religious purposes. Okay, right? Depending on your objects of the organization. The word application is a very wide term. It is not expenditure. The income tax law does not talk about expenditure. For organizations that have exemption that are registered under Section 12AB, whatever income you're applying towards achieving the objects of the organization. Supposing you're registered as a relief of the poor, whatever amount you're spending towards relief of the poor, including the assets you buy for the relief of the poor. Let's say you buy a van to take free food, that will be allowed. You buy a piece of land and construct a building where you want to cook, will be allowed. And your activity becomes large, you want to have an administrative office there, it will be allowed. So anything you spend to achieve the objects is allowed as application. That is why they use the word application. It's a very wide term. And even the loan taken in the previous year that you want to repay this year will also be allowed as application. Earlier, there were a lot of good things that are available. They allow your capital as application. When you buy, as I told you, buy a van, buy a piece of land and construct a building allowed as application. Till about few years back, various codes availed, even depreciation was also allowed as application. You get capital asset as application. You also get the benefit of depreciation as application. Okay, right? But now a lot of changes are there, and we'll have to learn that a little later only. And what it says is that when government understand charitable or religious organizations are unique in nature. They are not doing business, they are not earning income. So they are dependent mostly on voluntary contribution. 1 year you may get, another year you may not get. Let's say you run an orphanage, children's home, where you feed, you take up children, don't collect any fees or collect very nominal fees, and then take care of the children. And 1 year you get donations, second you don't get donations. When you don't get donation, you cannot tell. So let's say you're on a rented premises. You cannot tell the landlord saying that, sir, this year I received only so much donation, so please reduce my rent. He will not say, Baba, get out of this place. Or you cannot tell the children, look, children, I don't have an income, so you starve. Not possible. So government understands that. That's why what they say is that every year you can accumulate 15%. Let's say your income is 100 rupees. Government says you spend 85 rupees. You apply 85 rupees. Balance 15 rupees keeps accumulating. Year after year, you keep accumulating. You spend it later on when you need that money. Okay, so government allows 15% year on year for you to These are also the exemption available. Sometimes, what the section says is that section 11.1 clause 2, what it says, the explanation 2, what it says that in case you may see, we are saying that we'll have to apply 85%, 15% you can accumulate. Let's say you're running a school. A lot of schools during COVID time, there were a lot of arrears of fees. Supposing they follow accrual basis of accounting, let's say the school income, the school received 50 lakh rupees. The arrears of fees is another 50 lakh rupees. So the income as per the statement of account, income and expenditure account is 1 crore. How much they should spend? They are allowed to spend 85 lakhs. Do they have money to spend 85 lakhs? They don't. They have only 50 lakhs with them. That's the maximum they can spend. So government says that in such cases where you not receive the income, you exercise an option under section 11.1 clause 2 by simply filing on form 9A. I will grant that as a deemed application. Okay, right? And the next one, when you want to accumulate for a specific purpose. Let's say you want to construct a building. Let's say you're a medical institution, you want to construct a clinic building. And you're not a big medical institution, you'll have to save. So government says, yes, possible. You keep saving, you accumulate. There are conditions to that. They say that maximum you can accumulate up to 5 years. So you will have to spend the money within 5 years of accumulation. You can accumulate for the specified purposes. That is possible. There are other conditions. I don't have time to explain to that. Corpus donation. When you get any donation as corpus, it is possible. Government says, I will allow you. That's exempt from income tax, subject to fulfilling many conditions. Earlier, as I told in the beginning, corpus was one of the easiest one to do that. Now it is not so. A lot of conditions attached to that corpus donation. Then capital gains. You get a lot of benefit in capital gains. We all know for individuals, supposing I sell a property, let's say I sell a property for 2 crores, and let's presume the cost of that property acquisition, even after indexing, is only 10 lakh rupees. So 1 crore 90 lakh will be taxed on me. Long-term capital gains. Let's assume it is a long-term capital gain. 1 crore 90 lakhs will be taxed on me. What is the best option available to me? I can put 50 lakhs into infrastructure bond, capital gains infrastructure bond, which are notified. And if I do not have more than one house, I can invest into another house. Okay, right? Provided I sold the property, it's a house property, or it's a land or any other long-term asset, I can buy 54 and 54E. Yeah. Whereas for charitable organization, what the law says is that you sell a property for 2 crore rupees and you buy another property, any other property, anything else. Let's say you sold it for 2 crores. You're a hospital. Out of that, for 1 crore, you bought a CT scan machine. Government says, I'll allow that as an application. Then you don't have money for running your organization. you are taken about 20 lakhs for running the organization. Government says that will be allowed as application to you. Buy any assets, use it for running organization, allowed as application to you. Or the simple thing, what the government says is that you sold a property for 2 crore rupees, you put the 2 crores in fixed deposit for 1 year, the entire income is exempt. You don't need to pay any taxes. All these 6 benefits are available for charitable organization, subject to you're registered and fulfilling the various conditions. Otherwise, none of this will be applicable to you. I think with this, I will close today. And there are various other issues. I really don't have much time to talk about it. I'm sorry I'm not able to access YouTube. If I can only talk about few more things and then I'll get into that. Okay, right? Anyway, let me explain few of these things. Activities outside India. As I explained to you in the beginning, activities outside India is the benefits should not go outside India. Let's say, for example, you're running an organization. You spend your staff to get trained outside India and then come back to India. This is not an activity outside India because the benefit comes back to India. The trained staff is coming back and serving in India. Okay, that is fine. Okay, right? So, or you go outside India for fundraising. It is possible that you can claim there as an application because the benefit comes to India. The most important, the dangerous one is the cancellation of registration. Section 12AB4. We talked about the various benefits available, the various conditions under which you are eligible for that. The first and the basic condition I said is registration with the government of income tax department, registration by the Commissioner of Income Tax. It is possible Commissioner can and will cancel a registration. Section 12AB4 talks about specified violations. There are various violations that the laws talks about. One such violation is that, I'll just talk about only 2 violations, maybe time permits, we will discuss that in detail. If you are carrying any activity other than objects of your trust, your organization registration will be cancelled. Okay, if you are carrying out any activity outside the objects, we have a client, they are doing wonderful service. Today we were reviewing their accounts. My staff came and told me, sir, they are into tree planting. They spend only very minimal amount, but their object does not permit. I called and told the people, look, you are running a big risk. You're an organization, huge organization, but your object does not permit you to get into environment. Your object is only childcare. You cannot go beyond that. In fact, when there is a specified violation, even the commissioners do not have the power to, waive off, condone. Tax only the violated part. They do not have. The only option before them is to cancel your registration. One more. The section talks about you will have to comply with all the laws that are relevant for running your organization. What are the laws that are relevant for you? You should know. Right? Supposing you're running an orphanage, what are the laws relevant to me? Apart from income tax, if you're registered with FCRA, right, GST will not be applicable to you. If there are more employees, more than 20, PF Act, and ESI Act, and then there is the new law known as Juvenile Justice Act, JJ Act, popularly known. You have to be registered under that. I do not know whether there are any more laws applicable to you. You should be registered, but remember, tax department will know. For you, you are the only organization, whereas for tax department, they will be, supervising or they'll be scrutinizing returns filed by at least 10 or 20 different organizations of similar activity. And they would have mentioned that they are fulfilling these laws, they are complying with these laws. And if you don't do that, there is every possibility the commissioner can say that you're not fulfilling the law because this is essential for running your organization. Okay, so the other conditions we will discuss it a little later. What are the consequences? Supposing commissioner cancels a registration, the first consequence is that tax on accredited income or tax on exit tax. What is that exit tax or accredited income? In simple terms, you will be asked to pay MMR, maximum marginal rate, rate tax, taxes at the rate of maximum marginal rate, which comes to approximately 43% on the market value of your assets less liabilities. Let's say you're an organization and it started some years back, let's say about 20 years back or 30 years back. At that time, your organization, your founders bought a piece of land for 1 lakh rupees. And today, the value of the land is, let's say, 2 crore rupees. And you are violated. There are specified violations by you. Commissioner cancels the registration. The immediate impact is that on that 2 crores, you have to pay 43% taxes. What are the next one? You are not eligible for tax exemption and will be treated as AOP. If you are an organization registration section 12AB, you are eligible to file tax returns under form when using form ITR 7. Otherwise, you'll be filing ITR 5. In ITR 5, the normal stance taken by the government is that, tax department is that, they will not allow any expenses other than the expenses incurred for earning income, because that is what section 37 says. Read section 37 of the Income Tax Act. It categorically says whatever expenses you're incurred to earn income will be out as main deduction for you. They don't allow capital expenses. They don't allow any transfers. So if you run some projects and you get some grants, donations, quite likely tax department will not allow that grant as expenses to you. Because I have handled cases. Organizations, where when government said you are not eligible for section 11, they have taxed on the gross income, less depreciation, less bank charges. So this is the serious consequences. You'll have to be careful about it. Anonymous donation. What is anonymous donation? Anonymous donation is where the identity of the donor is not available. You have a donor and their identity is not available. In simple terms, government says that you should have the name, address, and the PAN number or Aadhaar number. One of them should be mandatorily available. If you're not having that, there is 30% taxes on the anonymous donation. Supposing you receive 10 lakhs as anonymous donation, donors' names are not available. You put hundi boxes in hotels. You kept hundi boxes in different places. You collected money and you don't have details of the donors. Sometimes you may get online transfers. That will be taxed at 30%. Please note that this anonymous donation does not apply to religious institutions. If you're a temple, if you're a church, if you're a mosque, you collect donations, you collect offering. There is no question of you getting the donor's name, address, and PAN number or other number. That is not necessary. Business deductions, okay, right? What is those business deductions? We all know that when we file Form 3CD, if any cash payments, any cash expenses above 10,000 rupees is allowed. Same thing applies here also. TDS, you're not complying with TDS, 30% will be disallowed. Same thing applies here also. I also talked about losing tax exemption. There's a very major threat. There are 4 instances where you may lose your tax exemptions. We'll discuss that a little later. And exemption to Section 80, that also we'll discuss it a little later. I think with this, I will wind up my session. And yeah, if there are any questions, you can ask me. Unfortunately, I am not able to access YouTube. So one of the organizers, if you can tell me the questions, I'll be willing to answer that. Happy to answer the questions. Really sorry. Let me see. help me whether I'm able to open it in my laptop. Excuse me, let me try that. Please, sorry, I mean, I'm not able to see any questions. If there are any questions, I mean, you can
Yeah,
send it through.
sir, I'll just check on the YouTube and I
Yeah,
will
please. Yeah, please,
read the
please, please.
question if any question is
Yeah,
there.
yeah, right. Thank you. Thanks, Pooja. Thank you.
Sir, so far no question has been asked on YouTube.
Yeah, right. Yeah.
Yeah.
Okay. Thank you. Thanks. Thanks. Okay.
Thank you, sir.
Thank you so
for
much.
the wonderful session. It is a very niche area. People want to work for the charitable and religious institution, but many times they got confused. Even one of my own family member is running a charitable trust. And once every time if they have any query, I have to just go through lots of content, lots of things, and then only I will be able to give them the correct answers. So it's a very niche area. Not many people are doing practice in this area. Thank you so much for enlightening us on this topic.
Thanks, Pooja. Thank you so much. Right. I mean, in case you want any support from me, please do connect me. I am willing to help you.
Thank you, sir. Thank you so much.
Thank you. Thank you so much. Bye.
Bye, everyone. Good night.